Hi everyone. Good morning. Thank you very much. It's good to be back in KL again. Definitely a lot of good food before I actually came to today's session. So let's dive in a bit. Just a little bit of context. When I have to thank Labuan IBFC and Farah for inviting me up here. It was quite interesting why the team wanted me to speak on this session, because it's actually quite broad compared to what I usually talk about, which is just blockchain, crypto, regulation, and all that. But when I dive deeper on what BFC wants me to talk about is how to merge the mindsets, how to merge the two different ecosystems together. As we have seen, at least from the Singapore perspective, well, I'm in KL now, so I can speak more on Singapore's things that I can speak about. Definitely, there are things that were working and were not working. So, for example, the Singapore government definitely wanted many of the fintechs to work with the banks. It is definitely not an easy task, because the banks had a lot of infrastructure and legacy systems and approval systems that they need to work on. Whereas a startup only has like 10 months, 16 months to survive, and then by the time that they got an approval on the 14th month, they might have already been dead, right? And we have seen a lot of these partnerships actually not working out. And the mindset of a fintech was supposedly to be technology disrupting existing financial services. So by having banks working with fintech, also there's a paradox right there. Okay, so I think it's important that we are embracing this, that there is a new fintech ecosystem. It is here to stay, regardless if it's working with existing incumbents or not. Not the ones, for example, in decentralized finance, as the panel was discussing about before. So I'll separate into three different sections. One is learn from your experiences and observations of what you have seen in the past few years in terms of how your experience in the banking or financial services, or you're still in it, but what you're seeing in the fintech space. Any ways that you think would be good to merge it, any compromises possible on both sides. And let's say there is a way to merge all of this, what do you think the future actually looks like? Okay, so before all this now, let's get an introduction of each person. Let's start with Andrew.
Test. Yeah, look, hi, my name's Andrew Powell, PAL, from the Gibraltar Stock Exchange. I also have an advisory role with our distributed ledger technology called Stacks, which is kind of Anson's alluded to, was showcased at the recent Singapore Fintech Festival. Look, I'm a sort of traditional broker, so I spent 20 years at UBS, the Swiss bank, 10 years in Sydney, you can judge by my Aussie accent, and 10 years in Singapore. So yeah, I think as a sort of general precursor to this topic, I think when Karl Marx wrote Das Kapital, I think he intended communism to take off in the industrialized countries such as the United Kingdom or Germany, but it actually manifested in Russia, which was pretty much a agrarian society, then later on in China. So I think when we look at this technology, where we expect it to take off may not be necessarily where it will take off. And I think that sort of segues into this discussion about maybe when Satoshi and the guys developed their technology, they thought it'd be taking on London and New York, but maybe the best application for it is in this part of the world, in Asia, specifically ASEAN, in this part of the world. So when you look at ASEAN, there's 600 million people, and I would suggest that it still is relatively underfinanced. There's a huge opportunity for financial inclusion, and there's a huge opportunity for new financial products. So I don't really talk about disruption, so I don't think we necessarily have to replace Wall Street and London. But in this part of the world, I think there's a great opportunity, whether it's Islamic finance and the concepts of Waqf, or whether it's green initiatives, so-called ESG, environmental, social and good governance. maybe this is the part of the world where this distributed ledger technology and smart contracts takes off. So if you think back to that Karl Marx analogy, it didn't happen in the United Kingdom and Germany, it happened in Russia. So maybe new technology happens here and gets deployed here for valid reasons, as we heard from Robert before. You know, no more POCs, let's actually start doing things.
Gopal?
So, good morning, everyone. So, I'm Gopal. I manage the ASEAN Fintech for EY. So, my primary responsibility will be look at the various kind of innovation that is happening currently with fintechs and startups, and how we can plug in this innovation to some of the problem statements of the enterprises. So, it is like arranging the speed dating between the fintechs and the corporates. So far, we have seen interesting insights and learnings of how this cohesion or the marriage happens between the fintech and the enterprise. Happy to share those details later.
Hi, I'm Jonathan. I am one of the corporate partners for Zaid, Ibrahim & Co. So just a little insight of who we are and what we do. We are a regional firm with 18 offices all over ASEAN. And my portfolio, I cover fintech very similar to, I think, Gopal. I look at the regulatory framework. I look at what the new structures are coming in. And to a certain extent, I think when it comes to financial technology, and for innovation to continue to sprout and thrive, industry must always run slightly faster than regulation. And that's the part, I think, as we go along, we'll explain a little bit more and I'll share a little bit more what I mean by that. Will?
Thanks, John. A very good morning, everyone. My name is Wilson, and I'm the Partnership Director and also a founding member of the Fintech Association of Malaysia. So the association was founded in December 2016, when the word fintech was not made a buzzword yet. And today, I think it's safe to say that fintech has reached a tipping point, not just in Malaysia, but also in the region. Not just people from the financial sector, but from different verticals. They are looking to fintech to see how their businesses can be enhanced and transactions can be made better. And today, the association, we have more than 100 members, comprising of fintech startups, financial institutions, and also legal firms and accounting companies. I'm also a co-founder of an insurtech startup, Policy Street, which is an approved FA in Malaysia. And I came from the conventional banking background. And just to address Anson's earlier questions about the convergence of the old and new economy, I think there are two sides of the coins when they talk about disruption. I personally believe that fintech can be an enabler where incumbents and also challengers can work together. Because if you look at incumbents, they have certain advantages when it comes to trust factor. I think Robert was talking a fair bit in the previous panel discussion, the trust factor and credibility. However, they may not have the advantage of technology owned by some of these new players or tech companies. And we believe that technology has two key advantages. First is on scalability. It can scale massively to multiple networks. And secondly, technology is able to help to digest and analyze on active data. And all in all, we believe that fintech companies and financial incumbents can work together if they are able to solve the ultimate pain point faced by the consumers.
And lastly, hope not the least, my name is Anson Zeall. I'm the chair of the Blockchain and Cryptocurrency Association in Singapore. We worked very closely with our own central bank MAS on a code of conduct. Actually, it's a code of practice where it tells the banks and different stakeholders on how crypto companies, even blockchain and crypto companies, on what they do for their KYC and AML processes, so that banks feel more comfortable on onboarding them. So three main things that we have is, for example, the processes on KYC, on-chain and off-chain monitoring of digital assets, and letting the banks know what are the processes done, because that's the biggest problem now when, not just in Singapore, but opening bank accounts worldwide for pure crypto companies. Not only that, was also the not just in crypto, so the founding member of the Singapore Fintech Association as well. In terms of fintech and blockchain, that is still within my domain. So, okay, let's dive into a much more open-ended topic about your experiences. I can see everyone here has quite added together at least 70 years of experience in the space, right? What is your observation when you came from the old sector to the new? Andrew?
I think, there's a gentleman called Paul Volcker, Volcker. He was he ran the US Fed during the 80s when interest rates were 20%. Sadly, he died. He was 93. But he also, there's also, when Dodd-Frank came out 10 years ago after the financial crisis, there was also what was known as the Volcker Rule was implemented. That basically said all the big investment banks like Goldman Sachs, my old shop, UBS, Credit Suisse, etc., couldn't use bank capital to do trading. So sure, a hedge fund or an asset manager or a central bank like Bank Negara could be involved, but Goldman Sachs couldn't be on the other side. They could broker the deal, but they couldn't trade against these entities. But one of the adverse consequences of it was in this region. So, for example, if I'm a corporate bond issuer in Thailand or in Singapore or here in Malaysia, basically these guys like Goldman Sachs, UBS used to provide a lot of the liquidity. And that suddenly sort of started to dry up. So this part of the world, I think, the extraterritoriality, if I could use that word, the impact of foreign regulation, whether it was US regulation or European regulation under MiFID II, etc., had a bigger impact on the financial markets here, I would suggest. So when I left UBS 5 years ago, I was scratching my head thinking, what can I do in the brave new world? So I think seeing blockchain technology, distributed ledgers, as Robert mentioned before, smart contracts. How can we, rather than throw out the old system, how can we do keyhole surgery? So in the old days, they would chop pieces of you out and throw it away. Now they can just go in with keyhole surgery. So when I left the futures business at UBS, a lot of the things which were being discussed back then was counterparty risk. How do I mitigate what happened during the financial crisis? Basically, regulation when it comes to documentation. So ISDAs, the International Swap Dealer Association agreements, which is basically English law, which looks after trillions of dollars of assets. Potentially there's a role for smart contracts there. Balance sheet, the impact of the Volcker Rule and Basel III from an accounting perspective. These have a big impact on liquidity in this region and the ability of this region to raise capital to do virtuous projects, such as housing affordability projects here or water treatment plants in Kalimantan or in Sarawak. How do we raise capital without having all these external forces? So essentially, I think this new technology and the initiative which we've seen happen since the advent of Bitcoin has refocused people here to think, how can we be more sustainable and independent? And when I say sustainable, that also comes from a environmental point of view. How can we look at new green finance initiatives? So just quickly, ESG is very hard. It is very hard for the existing financial houses to offer products which could be deemed to be ESG compliant, but there is a big demand from all the pension funds, whether it's Australian superannuation funds or even here in Malaysia, to invest in these ESG investments. So how can we issue sustainable products using this new technology? So Singapore at the Fintech Festival came out and said, hey, we've got $2 billion to invest in this, and not surprisingly, the MAS has come out and said, hey, for green finance, green bonds or green sukuks, whatever. We don't need pieces of paper to issue this. We can do this all on blockchain. We can have immutability. We can even have a decentralized version of it where mums and dads, via their wallet, can invest in a green bond, and maybe that gets valid for their pension.
So basically, you see like it's more on ground zero, and therefore not so much of a very old legacy system around here. Therefore, you can see that maybe with the new technologies that we can expand all of it, basically leapfrogging in a way.
I think, right? For new financial products, such as green digital assets, just go straight to the new technology. For traditional products such as bonds, Not so much futures, it's pretty efficient anyway. I would say for bonds in this part of the world, yes, there needs to be keyhole surgery done.
So this segues for Gopal. I know EY does a lot of work with regulators around the region and need to understand the different regulations and stuff, right? So with all the new technologies, new ways of financing, new fintechs, how like the observations with regulators and working on these, has it been a very interesting or even a challenging journey to educate them or getting them to know more about this?
Okay. So thanks for this question. Just to add on the previous question on what the change we have seen in the past and what's the change now. So I think fundamentally, since Andrew has spoken on the capital market side, let me represent all the consumers and let's speak in a retail banking side. So what I've seen, what we feel there is a change happened is, previously there is a lot of focus on the product development. How do I launch a particular product to a particular segment? How do we tweak? What kind of features to the product? So it is more of product centric. Now what we have seen, the change is happen towards experience. How can we increase the experience? How can we enhance the experience? Because all of us are a consumer 4.0 kind of a thing. We everything want on a click of a button, on a mobile device, omni-channel, invisible, all these heavy adjectives are coming up. So how do we bring this experience? We feel that's the new change coming up. So for this second question which you have asked on the readiness from the regulators for all these new things, in fact, yesterday I was in a similar session in Hanoi with 4 different regulators from Myanmar, Cambodia, Laos, and State Bank of Vietnam. The big question they have asked is about 3 things. The first question is, all these big techs are coming into the Southeast Asia because of all the reasons we know, like we have a lot of population, young population, digital savvy, and all this kind of, all the attributes are favorable. So all these big techs are coming in. So whatever the investments, tech investments happening in China, we are trying to mimic in all the other ASEAN or Southeast Asian countries. So with this big techs coming into the place, what's happening to the market? Are they create competition? If they are creating competition with the existing incumbent players, then it is good. So we can expect better products, better service, experience, and all this stuff. But if they are creating concentration in the market, then it's a play for regulators to have an eye on how do we mitigate. This is one aspect. The other aspect is, of all the technologies, of all the areas of banking we see disrupted, there are 2 main areas we see is highly being disrupted. One is the payments and wallets, and the other is lending. So some of the questions asked during the regulators in yesterday is what kind of framework we have to bring for lending, be it conventional or Islamic, or what kind of regulations, rules we bring for payments, wallet, what kind of controls, AML, CFT protections we have to. So these are all the allied activities around those segments. But what I see, there is a significant change in the mood with respect to the regulators on getting ready either to protect the consumer interest or safeguard whatever the X number of things, but I see the change is happening now.
So this segue is good to Jonathan now. Now, EY looks at more on the, not just the surface, but doing all the communications right with the regulators. You guys, the lawyers, to get it done for the fintechs, like writing the right things, to get things, applications in. And obviously when doing this, sometimes it takes quite a long time for licensing and all that. What do you see are the main differences when you work for a client that is from the incumbents compared to fintechs now?
Okay. I'm going to echo a little bit from Gopal, and I think taking his last point on lifestyle. I think what's very important in introducing fintech to any ASEAN countries at the end of the day is the need for localization. A lot of times we tend to see young entrepreneurs coming in, introducing concepts from different countries, but it may not sell as well as it is here in Malaysia. And that actually spills over to how receptive it is going to be when it comes to regulators as well. So on those kind of premise, on those kind of areas, if as much as we are talking about payment systems and e-wallets thriving in Asia, I would also take a little bit of a conservative approach to a certain extent, because if you were to take China as our main market leader when it comes to e-wallets and payment system, we also need to look at its historical evolution. And at that point in time, when China introduced e-wallets, QR codes, and payments system, it was a time whereby credit card, the credit card era was kind of skipped. At the point, UnionPay was a very, very small country per se at the point in time, and it was not able to support the ecosystem of China. So there was that huge introduction when it comes to e-wallets and payment system. But if you're going to compare the demographics back to, let's say, Malaysia, we have incumbent banks, we have our giant banks, and in emerging market, the amount of accountability, the amount of public governance that we need to have is always very delicate and very sensitive. And so when we look into a business model, when we try and engage with young startups or even foreign businesses that comes in, the very first thing is that we will always try to see whether there is a similar vertical that they can actually mimic first, so that it becomes a little bit more palatable when it comes to engaging with the onshore regulators per se. But I must say, not because this is IBFC event, but I must say Labuan has been very, very progressive as our mid-shore. And in that sense, it's always the fact that we feel, even as lawyers, like during the crypto exchange spurgeon in Malaysia back in 2017, central banks also took the initiative to I wouldn't use the word recognize, but to list them as reporting institution first before actually governing them. So in that sense, there was some engagement and some I would say a friendlier approach to industry players at the point in time. Yeah.
Very good. So this is good. So I made the story segueing into different parts. So now, I think, Wilson, you are the best representative for Malaysia to see how the fintechs are like. How have they, in a way, morphed or evolved throughout the years, and still the challenges or what successes you've been seeing?
Yeah, that's right. I think there are two key observations that I've seen in the past 4 years in the fintech ecosystem in Malaysia and also the region. So the first point is most of the more successful fintech companies, they are usually run by the ex or former industry professionals. I think fintech is a sector where it requires a lot of product specialization, professionalism, understanding of compliance and regulations. So there was a report done by one of the top global consulting firms, which states that the average age of the top 100 fintech companies, the average age of the founder is about 40 years old. So it means that these founders may have spent the past 10 years in the industry, and this leads to my second point. The proliferation of fintech comes when the fintech companies are able to address key pain points in the industry. Because incumbents, they have been there for the past many years. So the question is, what is the value or additional value that these new fintech companies are able to provide in the market? So the question that entrepreneurs or fintech founders, as myself as a fintech entrepreneur who runs operation, the question we always ask is, what is the additional value or pain point we solve? For example, P2P in Malaysia has gotten very popular among the young professionals and some of the even high net worth individuals. Although to these young professionals, they get return, a decent return. But when we look at the grand scheme of things, it is the SME who would not have the access to financing due to their lack of number of years of establishment or lack of certain business credentials. But due to P2P, a new way of funding, they are able to help their businesses to grow further. Same goes to ECF, equity crowdfunding. Essentially, it's like a mini IPO. It has helped a lot of SMEs or small startups to raise 2 million ringgit, 3 million ringgit, 5 million ringgit to grow the businesses to the next level. And I would like to echo John in the earlier statement on payment, the payment in China. When Alipay was first started, it wasn't a super app. It was started to solve one key pain point, which was the trust factor mentioned by Gopal. In 2004, when the buyer and the seller were transacting on Taobao, there was no one central escrow which controls the payment. And this was how Alipay was first started, and today they evolved to become a super app. So in my observation, the past 4 years, I think it boils down to two key questions. You must know the technicality of fintech, or if not, you must have a co-founder or a group of advisors who will be able to help you on that part. And secondly, you must keep on pressing the pain points. Who is your consumer or target audience that you're serving? And what is the pain point that you're addressing? And with that, I think your business or fintech will grow far.
Just chip in, just on, you mentioned equity crowdfunding. I think the big prototype there was the Spotify IPO. Essentially, the capital was raised off exchange, and then they just plugged into a US stock exchange. They didn't need a big roadshow of Goldman Sachs, sort of spruiking Spotify. The capital was raised. So I think that's a great opportunity here in Malaysia, using digital equity crowdfunding mechanisms where the KYC AML is already done. And then when you get to a certain stage, you don't need Excel spreadsheets, PDF files. It's all immutable on the blockchain. And then when you want to go public, you just go to our friends Vinny and Rani here at the Bursa Malaysia and just plug into them. So I think that's where we should be. There's not so much disruption, it's just been using common sense how to use this technology.
So it's interesting, Wilson, you mentioned on SMEs. I think that definitely the fintech industry has been evolving to the point that we realize these are the guys that are really in need. And also at the same time, why governments always support SMEs? One, they are one of the largest group of taxpayers, and the consumers are also from here. But at the same time, this is the group that has a very hard mindset to change. And I know a lot of fintechs have been trying to so-called crack it to see if it can open the market. What are your observations now in terms of how fintechs are serving the SMEs? Has there been any improvements or any learnings that people can take from this?
Okay. So based on our experience and learning, we see fintechs are trying to plug in at various points or challenges of the SME value chain, be it on the financing side or the lending side, or say reconciliation or invoice factoring. So the various attributes which fintechs are trying to help the SME community. But some of the common challenge we see with the fintech, for sure they have an exciting idea, interesting idea, scalable enough. But what we see is being missing from the day one is the angle or the hat of risk management or compliance. So they all worry of how to make it more sexy, more beautiful, more innovative. But in the mid of process, the key aspects was related to whether can we do this or does it fit into the existing rules or regulations that is being ignored in some of the fintech. This is with respect to some of the, with due respect to many of the fintechs here, but this is on a generalized statement. We see risk management is missing. It's not considered from the day one itself. So what we recommend is take risk management as a part of your thought process itself from the day one and make it part of a journey so that the end product you achieve, whatever the innovative idea, is more comprehensive enough.
I think also I think some people thought that real estate investment trusts or SMEs raising, say, up to $50 million US dollars worth to list, basically sort of property deals would be one of the first to go onto the blockchain, sort of so-called STOs. But there, I think one of the problems is who am I speaking to? Does the person I'm speaking to actually have the land, or are they just representing someone? So the Australian Stock Exchange has been quite innovative there. They have basically put a lot of the land registries onto their blockchain, in anticipation for that. So I think, yes, to your point, I think there's some existing mechanisms which need to be improved, which is not necessarily digital ledger related. It's just more about proof of ownership, etc. Who owns the land in Sarawak?
So definitely, risk officers out there and compliance officers, your jobs are definitely needed. Yes. So let's go to the next part. Now that we've discussed the different mindsets that have in incumbents as well as the fintechs, the challenges that they're experiencing, and a common factor, so to speak, for SMEs that may be able to, like a common goal for both the governments as well as fintechs. Do you think there is a very big chance for, one, the guys obviously working, the fintechs working with the incumbents, those are fine, but the ones that are growing themselves, like for example, the TransferWises, the other big, or obviously Grab is trying to become like the digital bank, trying to get a digital banking license in Singapore. Is there a room for the tech fins as well as the fintechs alone without working with the banks? Is there a way to converge?
Yeah, maybe I'll take this question. I'm just going to streamline it to, I think, our upcoming digital banking guidelines. That's one of the key initiatives for central bank this year. If we were to look at it, and again, isolating it back to the Malaysian demographics, as all of us agree, we are a SME-based landscape, and very much now we've introduced MSME, small, medium-sized enterprise. Now, if we were to look at it in a sense whereby whether is there room for independent fintechs to just scale and grow as another financial alternative or financial provider at the end of the day, I think there's a lot of room, especially here in Malaysia. Simply because technically, if we look at in the lending landscape and when we look at access to funds, as Wilson was sharing, access to credit has always been a huge obstacle for startups, for SMEs. Banks will require sufficient track record, they will require sufficient security for it. And as Will also pointed out, ECF and P2P has become an alternative source of funding in Malaysia today. But if we were to stretch that landscape a little bit more and we look into the platform industry, as you mentioned Grab, as you mentioned Lazada, Zalora, all these are platform industries that are really thriving in our digital retail market today. What they don't only have, apart from merchant, is the data of spending and buying. So if we were to then promote or allow regulation to come in and help them shape to a digital bank, that in itself will allow access to credit to be a little bit more friendlier, because that changes the entire landscape and requirements when it comes to risk management, when it comes to risk assessment, because technically my merchant's on my platform, and the spending trend, the accountability, the demand is purely tracked through the platform that I've already onboarded them on. So what stops me from actually extending a small credit line to these parties, which then allow them to scale in a bigger way? Yeah.
And
I was just going to say, from a geopolitical perspective, I don't think there's going to be much choice anyway. If the US government, if the current incumbent president decides to take $1 trillion out of the global economy to rebuild America's crumbling infrastructure, if President Xi, keeps going ahead with One Belt, One Road, that's another $1 trillion being spent on his predefined jurisdictions, all the stans all the way to Europe. So where does that leave ASEAN? Is this region going to be reliant on the Asia Development Bank or the AIIB? I don't think so. I think from a macro perspective, since Malaysia is such a SME-intensive economy, there has to be, excuse me for mixing my religious metaphors, but there has to be an epiphany where, if you have like crazy rich Asians like the movie, if they have the capital, well, why not invest in their own homegrown SMEs? I think this will have to have this sort of self-dependency, this self-propagation of businesses here without relying on overseas capital is going to happen.
so basically, there's also one more point in terms of converging. A lot of the startups, like we're saying P2P and all that, is still focused on lending locally. If you think of it like the internet, when it grows another 5 to 10 years, it is somehow that the P2P that's going to happen is going to be cross borders. So when it does go cross borders, you're dealing with either multiple currencies or you're dealing with some form of digital currency. How do you see the regulators actually adopting to this when everything is cross borders? Let me add one more point. So, for example, during the last couple of years, Financial Action Task Force, which I also work closely with right now, issued a guide on virtual asset service providers in June this year. So the main point that really made the whole industry panic was that the implementation of the travel rule that will need to be in. So basically, travel rule in our existing ecosystem, financial services, is that when A sends money to B, if you're a service provider, the B will actually know the bank, the person, and everything about basically knowing all the KYC of the sending service provider as well as the customer. But when you send cryptos today, it doesn't happen. Then when you send a Bitcoin over to someone else, you don't know who the bank is, you don't know who the person is. Now FATF is put out a guidance that you need to do this. Even in Singapore's Payment Services Act, you need to share the information, right? But actually, under the very nice rules, is actually very difficult, right? Because in Bitcoin, you have to voluntarily do it. How do you actually do it when you have a lot of transactions? But at the same time, P2P has to grow cross borders and engaging the regulators. So do you think there's a way for this? Because P2P, I think somehow would need to be broken past its own borders. How do you think it will evolve when communication with regulators?
So, one interesting example I can tell, cannot quote me outside this forum, but we have seen if a particular fintech solution is been coined or built for a particular market, and then if we wanted this solution to be applicable in other market, so they have to go through the similar set of regulatory processes, steps in order to make it live in that other market. So in order to make this ease of expanding to cross-border international regions and all, some of the central banks of what we hear, they are in a discussion to form a consortium, and then they issue some kind of a regional, I don't know whether it's the right word to use, a regional passport kind of a license, so that if you operate in one jurisdiction, you can operate in 3-4 countries which fall under that umbrella. So which makes it easy, seamless to expand in the other markets, all the FX related things, cross-border payments, seamless interoperability, all this are some of the dimensions of this whole framework which will be taken care. So this is at a conceptual stage. I haven't seen it live yet, but if these kind of things comes up, I think it will make the life of fintech easier. And then they can focus on the core innovation rather than working on all this administrative or regulatory stuff.
It actually happened in Singapore with the MAS's Monetary Authority of Singapore's Project Ubin. So phase 1 was about DVP, delivery versus payment. Phase 3 was a cross-border payment from the MAS to the Bank of Canada there. So Singapore's called Project Ubin, the concept of an island where you can do things, a small island just off Singapore, and in Canada is Project Jasper. So that's already been solved. So the point of the previous panel, look, this has already happened, let's get on with it. And our technology called Stacks was invited to deploy a digital bond onto that platform and do a cross-atomic swap. So basically the security was issued, settled, and the payment had Singapore dollars vis-a-vis US dollars with JP Morgan's Quorum payment system. But I think in this region, why not do it? I mean, for example, why can't someone list a security in Labuan for an eco-friendly resort in Sarawak, and they also have to make payments, into Philippines, into Mindanao. So I mean, I think these things are viable to happen, and it's already been proved on the blockchain. So yeah, let's just do it.
Yeah. Perhaps I could add in from the perspective of the Fintech Association. So Fintech Association of Malaysia, we are part of the ASEAN Fintech Network. So we are working very closely with different Fintech associations in respective countries where we have active data of different companies, and also from our understanding, we are able to give the feedback to respective regulators. For example, the association, we recently hosted a visit by the Egyptian banking institution. So they came over to Malaysia to understand our banking landscape. Early this year, we also were engaging with a few financial institutions and fintech companies from MENA, the Middle Eastern and North Africa region, and also the Nordic region. And of course, in ASEAN, we are working more closely with different associations. So what we are doing today is to understand the hyper-localized data and different set of problems faced by different communities. Because if you look into the financial sector, each country, even in ASEAN as a whole, has different level of maturity. For example, perhaps Malaysia, Singapore, we are more advanced to some certain extent, but it could be quite varied in other markets. And when it comes to Hong Kong or East Asia, there are also certain permutations. So for a local startup in Malaysia, if they were to expand to Hong Kong or East Asia, we tend to become the bridging platform to help them to reach out to the right partners, whether through the Fintech Association or through the right local partners, to help them to understand the local markets, to develop and create the right business model. Because after all, Fintech is also about addressing the regulatory issue and also the compliance concern.
Great.
Yeah, sorry. Just to add on a little bit, I think in order for us to actually be able to have a better and a more ease of cross-border transaction or convergence in terms of the global fintech scene, I would say that the efforts that Gopal has shared is most crucial. Because at the end of the day, when we look into the digital market in terms of digital assets, what's always missing is the recognition of a single digital identity. And because of that, regulators are very passive as to how movement of funds are being abused at the end of the day. And the core element when it comes to most regulators, when it comes to the digital assets in the crypto scene, is very much the fact that whether it is the nobility of the blockchain technology or not, whether these technologies are being abused for vices, for money laundering purposes. And that's why I think Malaysia, we've set 6-7 sectors when it comes to AML compliance, and that is always the reason as to what the problem that regulators face is that we can't trace where the source of fund comes from. So until and unless we have maybe a passport that we can recognize every single player, or some form of communication between parties, an open API, or some form of digital identity being recognized, this convergence, this cross-border transaction will always continue to be a bit of a hurdle for us to pass.
So segue to a mini plug. So from the FedF angle, I'm working with IDEXA, which is a effort by 8 associations, including the Swiss, Singapore, Blockchain Australia, Korea, Japan, and a number of others. We have worked on a white paper called the Open VASP. So basically, it becomes an open source messaging system that different service providers can use to send the info. So for example, if you do send a stable coin or a Bitcoin across, there's a messaging layer you can actually write on all the metadata you need, like what license number, customers, and so on, and send to the other side. And then FedF right now is looking into this, and then will dissipate to the other jurisdictions very soon. So now we only have 9 minutes, so we have, now that I can see some people saw me looking at the iPad and now putting thumbs up on the questions. Let's quickly answer some of them before we end off with what do you think it will be like in another 5 to 10 years, okay? So first question that's quite popular, I think this can be for Wilson or any others on the panel. Is there adequate diversity in fintechs in Malaysia? E.g., are there too many e-wallet providers, or is there too many of something, or is it quite diverse enough?
I think the fintech verticals in Malaysia have diversified in the past 4 or 5 years. You would see in the latest fintech news report, there are a few hundred fintech startups in Malaysia, from P2P, ECF, blockchain, insurtech, or even platform aggregator. But what is crucial is that which of these players would be able to access the most active and also the most vast data pool. Because if you are able to access to this different data, you will be able to not just look from the product perspective, but from the customer needs perspective. And this is where I believe the change will come from B2C, which is business to consumers, to consumer to businesses. With the data from consumers, different financial institutions or startups are able to customize and develop new products, addressing to the needs of consumers. And back to the question of whether there are too many e-wallet players in Malaysia. I think this is a very popular question. I think it boils down to the different pain point or additional value that they are able to solve eventually. So who is the most active ecosystem player among these e-wallet players? If they have the access to the most active one, I think they will emerge as the strongest contenders.
Okay, so segue.
Maybe just to add on a contrarian view with due respect, although Fintech Association take the log of how many fintechs are there, last time when we did the count, we see in Malaysia there are around some 250 plus fintech players who publicly raise their hands, I'm fintech. I mean, we need to see whether they are existing today or not, different story. But if we compare with Hong Kong or Singapore, so Singapore, there are around 560 plus fintech companies. And Hong Kong, if you look at the investment happening, fintech is growing at a CAGR of around 21% CAGR. So what I see is, to be honest and fair to all of us, even though there is a number 260 or something, whether it's small or big, but if we compare with the other jurisdictions nearby, I feel there is a lot of work to be done. And specifically on the Islamic fintech, last time when we are doing, I see there are only handful of fintechs who are doing innovation on the Islamic side of doing things, even though Malaysia is popular for Islamic finance kind of an aspect. I think there is one aspect needs to be focused as well.
So perfect for the next question for Gopal as well. In terms of fintech, or others as well, fintech revolution globally, which part of the world should we refer to learn successes and failures for this tech right now?
If you look at the global unicorn list, the big names come from China, India, UK, Germany, and US. I think these are all the top 5-6 names you should look at. Yesterday I was reading somewhere and I found that the total number of fintech companies in India is around 30K. So in Malaysia we have around 260, although the demographics and all different, but that is the scale, that's the benchmark we have.
Great. Okay, so to the last part, which is the more rosier part, but a little bit different if I asked this question 3-4 years ago, because we really don't have much of a precedent to look, the lessons learned. Now that we have seen where the things for fintech have evolved, including the crypto side of things, where do you see now in the next 5, even 10 years? Is it more clearer, or there's still a lot of things that we need to do before we can even answer such a rosier question? Andrew?
I think when I was growing up, when you used to see Swedish people on television, it was probably ABBA. Now when you see Swedish people or some young Greta Thunberg screaming at everyone about, save the planet.
Time Person of the Year.
Yeah, and old people like me are horrible. But look, I think, with Australia on fire at the moment, burning down there, I think, look, whether you believe in climate change or not, I think, as I mentioned before, ESG, environmental, social good governance, I think that's going to be critical. From a supply side, I think there will be people, who are raising capital to do water treatment plants in Sarawak, or environmentally sustainable recycling plastics in Jakarta, whatever, in this part of the world. So I think there will be more issuance for sort of so-called green initiatives, and I think bonds. They say gentlemen before bonds. I think bonds could be the mechanism for this to happen. And as we heard in the previous panel, the use of smart contracts governing ISDAs, governing any clause in a ISDA swap. I'm not speaking a bit technical here, but basically smart contracts can help do a lot of the governance. So, and also from a demand side, all the big pension funds in the world, whether it's Khazanah or the Norges Bank in Norway or the Aussie super funds, are mandating that they divest from, say, carbon-producing assets such as, we all know who they are, and invest in these green funds. So I think that's going to be the big change when it comes to sustainability, and that can be driven by the wallet. So people can invest directly into these listed assets. But these assets will have to be regulated and sustainable.
Gopal, how do you see it?
If I have to predict, speak like a futurist, based on whatever we read from the market and based on our learnings, of all the sexy technologies we have talked so far, blockchain, AI, RPA, whatever it is, we see a lot of betting or a lot of hope is there on 2 specific technologies for now, at least in the financial service industry. One is on the process automation, which is the RPA, and the other is on AI. So if we look at the curve of adoption of these technologies, when we assess benchmark with other technologies, we see AI and RPA standing high with respect to other technologies. So I think that explains also, with the traditional kind of processes we have within the banking system or an insurance ecosystem. So all these are the little wins, low-hanging fruits. We can deploy these things, and we can do some cost savings or give better experience.
So even incumbents will also have these sort of technologies inbuilt into the systems. Okay, great. How about Jonathan?
Likewise, I think if you were to just give a guesstimate for what's going to happen in the next 5 years, I'll say that Asia and especially ASEAN is the place to look at the end of the day. And any fintech players that's starting up right now or is in their scalability stage really would have to not just look at the jurisdiction that they're in, but to be able to actually see ASEAN as a whole. So when you want to scale, I think in ASEAN itself, and as it was mentioned by Will earlier, when it comes to fintech, there must always be a problem statement for us to solve. And I think if we look into the ASEAN demographics, especially with emerging markets like Vietnam, emerging markets like Myanmar, there is a lot of room whereby we tend to talk about when it comes to the unbanked and underserved. And that in itself would be the easy, low-hanging fruits entry for any fintech company that would like to scale at this juncture. Of course, I do echo what Gopal says. AI is definitely something that most of our local players are even looking at this point in time. But if I were to just maybe look at ASEAN as for the next 5 years, I think this is where we will start setting a footprint, because very much we are having a lot of younger entrepreneurs who are perhaps immersed in foreign markets and understand how certain financial structures are moving. But when you bring it back to our local scene, we will see the little gaps whereby they can actually fit. And I think that would be what I will see ASEAN as.
Wilson?
Yep. I think, first of all, we have to acknowledge that the fintech revolution is not happening on a standalone basis. It's happening together with the grand scheme of things, which is the Industrial Revolution 4.0, which has changed the way we communicate, the way we transport from one point to another, the way we purchase things. And of course, banking transaction at its core will be very critical for our lifestyle and also our essential well-being. I think in the next 5 years, if the entire fintech revolution is guided carefully, because there are a lot of risk components involved in it as well, if it is guided carefully and the notion of serving the underserved is well maintained, I would say that the real financial inclusion will be able to be achieved and enhanced, especially in emerging markets like this region.
Thanks. So this concludes the panel, and a lot of very good points. Financial inclusion is still a must. Education with communication between different stakeholders must be at the utmost, like the biggest driver for everything. And definitely, we hope to see much more people involved, included into the financial ecosystem. So please give me a round of applause for the panelists, and thank you very much.